All right, I'm glad you could join me here today because I've got huge news for you. The world's most indebted Chinese property developer is now being accused of the biggest fraud case ever in Chinese history. Chinese regulators are accusing Evergrande and its founders of inflating its revenue by a whopping $78 billion. The China Securities Regulatory Commission has slapped the group's main unit, Hengda Real Estate, with a $580 million penalty. And the founder and the chairman of the Evergrande Group has been hit with a separate fine and has been barred from the securities market for life. Now, after a months-long investigation, regulators charged that Evergrande inflated sales in its financial reports and used those allegedly falsified figures to sell bonds. They also say the group failed to disclose relevant information as required. Now, besides that, amid a record drop in birth rates in China, local media is reporting that many hospitals have been forced to close their delivery units this year. Reuters has seen notices from hospitals in eastern Zhejiang and southern Jiangxi announcing that they are closing their obstetric departments. Chinese policymakers have been rolling out incentives to grow families, including expanded maternity leave and tax incentives. And more babies are being born in the year of the dragon, but demographers say the dragon boom, so-called, will be short-lived, and many simply are not choosing to have kids because of the high costs in China. And this has led the country's population to fall for a second consecutive year. Meanwhile, warehouse developers are shifting investment away from China to other developing markets, with India receiving the vast majority of this redirected foreign capital. Companies are turning their backs on the world's second largest economy. And this is highlighting how concerns over China's business environment, economic recovery, and politics weigh heavily on the minds of foreign investors. NTD's Sean Marshall has more.
Land is getting hard to find in India, where workers are scrambling to build modern new warehouses and factories for companies betting on the country's economic boom or diversifying their supply chains beyond China. Firms are looking to expand manufacturing facilities beyond China as tension with the United States and other countries lessened the appeal of Chinese manufacturing. Foreign investors infuse an average of $4 billion in investments per year in Indian real estate, according to Collier's Investor Insights. Shift also comes as Chinese local authorities struggle to revive foreign investments after an economically bruising pandemic and property crisis depleted avenues of income. That is just the latest sign of a rush for leased warehouse space that peaked in the last quarter of 2023 at its highest in 2 years, says real estate firm Colliers, as India's economic growth of more than 8% outperforms advanced nations. While developers zero in on big cities and warehouses, Bahrain-based Investcorp is taking the opposite track by betting on smaller warehouses, said Gaurav Sharma, its India investment head. Investcorp plans to raise about $120 million for a fund to partner with developers and build up to 8 warehouses in India. But developers often find they first have to resolve complex land issues. Sometimes a single piece of land can have as many as 50 owners. Sean Marshall, NTD News.
Now onto Wall Street. The major 3 indexes closed higher on Tuesday after shares in hotshot chipmaker Nvidia pulled out of the red after it revealed pricing and shipment plans for its new hotly anticipated artificial intelligence chip. Here's a quick recap of markets.
Wall Street's main indexes closed higher on Tuesday after shares in heavyweight chipmaker Nvidia shook off early losses. The Dow jumped 0.8%. The S&P 500 gained more than 0.5%, and the Nasdaq added 0.4%. Shares in Nvidia dipped early in the session, then reversed course to close up 1% after it revealed pricing and shipment plans for its new Blackwell B200 AI chip, which it says could be 30 times faster than current chips. Rob Hayworth, senior investment strategist at U.S. Bank Wealth Management, says that while the high-flying stock may still have room to grow, it might be time for the AI-driven rally to take a bit of a breather.
for the market as a whole to be healthy, we really need to see some catch up from the cyclical industrial names because we have such a good economy right now. The economic data has been very good through the end of 2023. And even though it's a little slower to start 2024, it's still on very solid footing, and that should benefit more names than just technology.
Among other movers, a slide in Bitcoin dragged down shares of crypto exchange operator Coinbase Global by 4%, while miners Riot Platforms and Marathon Digital Holdings also fell. Shares of software company MicroStrategy sank more than 5.5% after the company completed a convertible debt offering, its second in a week, to fund Bitcoin purchases. And shares of analytics firm Spire Global soared more than 30% after it announced a collaboration with Nvidia for AI-driven weather forecasts.
Now let's talk about happiness. Finland once again topped the UN-backed World Happiness Report, and this was released today. But researchers urged policymakers to take action to resolve a dramatic drop in the happiness of young people in North America, as well as Western Europe and the United Kingdom. Here's more.
Finland is the happiest country in the world for the 7th straight year. Denmark and Iceland follow closely behind, according to this year's World Happiness Report released on Wednesday. Ranking last among 143 countries and territories, Afghanistan and Lebanon. One of the report's editors, Professor Jan-Emmanuel Deneuve, who also heads the Wellbeing Research Centre at the University of Oxford, said GDP per capita marks a key difference between nations' happiness, but that's not the end of the story.
Wealth does matter, but especially also how wealth is distributed. So in Finland, Denmark, and the other Scandinavian countries, you'll find that wealth is way more evenly distributed. So more people benefit from the wealth that's being generated in these countries. And then also each one supports a welfare state that provides psychological stability.
The United States dropped out of the top 20 for the first time. It fell to 23rd place from 15th last year due to a plunge in the sense of well-being of those aged under 30. The United Nations-backed report also shows it's not just American youth who are unhappy.
The main call for policy action from the World Happiness Report this year is we need to do something about these dramatic drops in youth well-being in North America and Western Europe and Britain to an extent as well.
Deneuve said a range of factors was likely to be at play. Those include increased polarization over social issues, negative aspects of social media, and economic inequality that's made it harder for young people to afford their own homes than in the past. By contrast, many of the countries with the biggest improvements in youth well-being are former communist countries in Central and Eastern Europe.
Now let me ask you, how do you feel about the IRS? Well, whether you like it or not, the IRS could be growing to be a six-figure team. The head of the Internal Revenue Service said that the tax agency will need to boost its workforce to more than 100,000 on the payroll. The commissioner said this would be to keep up with modernization, service, and enforcement goals, and to handle extra capacity. Right now, though, there are 90,000 employees. The commissioner said he would like to add the new staff over the next 3 years, saying that the initial hiring focus will be on improving taxpayer services and, of course, handling complex audits. The IRS will share more details on its hiring plan in the next month. It's going to explain how the agency will use the $60 billion supplemental funding awarded in the 2022 Inflation Reduction Act. The commissioner warned that the IRS will need more funding in the annual budget to do sophisticated audits and continually keep up with technology. So the Tik Tok Crackdown bill right now is a hotly talked about subject. So I was wondering, maybe some of our viewers may be curious about what content creators on TikTok are feeling. Some are actually saying that they're not worried after the U.S. House of Representatives overwhelmingly passed the bill, and it would give the TikTok owners Chinese ByteDance about 6 months to divest the U.S. assets of the short video app or face a ban if it becomes law. Now let's take a closer look at how they feel about it.
I think it's dangerous to put all your eggs in one basket. Content creators Cy and Lauren Willis, who go by Consuming Couple on TikTok, say they're not worried about a bill passed by the U.S. House of Representatives that could lead to a nationwide ban of the popular app.
We're somewhat indifferent about it. It's obviously a factor and something we need to think about, but we have Instagram as well, we have YouTube, other platforms, so it's not the end of the world, it's not ideal, and it's going to take 5 or 6 months, so hopefully we can bring audience over to Instagram if it does get further passed in the Senate.
The husband and wife duo, who make videos about eating and recommending global cuisine in New York City, have nearly 439,000 followers on TikTok. That's a much larger following than what their Instagram and YouTube channels garner. But they say the social media landscape is always changing.
In the beginning, when TikTok kind of first was blowing up, I guess post-pandemic, actually a ton more of our partnerships came from TikTok, and over time it's shifted over. So I think that's just showing the volatile nature of digital media and how things are just constantly changing.
TikTok content creators rallied to protest the House bill, with travel and accommodations to Washington paid for by the Chinese-owned company, according to a spokesperson. The House bill is the latest in a series of moves in Washington to respond to U.S. national security concerns about China. It would give TikTok's Chinese owner ByteDance about 6 months to divest the U.S. assets of the short video app or face a ban.
I don't think they've been open and transparent enough with people because the users, and 170 million people use it, I don't think 95% of them know why it's being banned. I don't think it's clear enough, and it's been different states have tried to ban it and they're basically just saying China.
It's unclear whether China would approve any sale of TikTok or if its U.S. assets could be divested in 6 months.
Another hot topic is Nvidia. The company has launched new software tools to help all companies incorporate AI into their businesses, even the ones who are less tech-savvy. The move broadens the chipmakers' offerings and highlights its push to get into the AI application sector. Right now, Nvidia is simply best known for providing chips to train so-called foundation models like OpenAI's ChatGPT-4, and the chipmaker unveiled the new software, which it's going to make easier for businesses to incorporate artificial intelligence systems into their work. Now, one person described it like buying a ready-made meal rather than buying all the ingredients, but we'll see. A Republican-backed Texas law that would allow state authorities to arrest people suspected of illegally crossing the U.S.-Mexico border was blocked again by an appeals court today, just hours after the U.S. Supreme Court had cleared the way for it to go into effect. Have a look at this report.
Texas law enforcement can no longer arrest people suspected of illegally crossing the U.S.-Mexico border again, just hours after the country's top court said that for now they could. The legal whiplash came from an appeals court who halted the enforcement of the Republican-backed state law ahead of oral arguments on the issue scheduled for Wednesday morning. Earlier on Tuesday, the U.S. Supreme Court had cleared the way for it to go into effect before the appeals court decides on its legality, ruling 6-3 along the justices' ideological lines. The judicial back and forth began last December, shortly after Republican Texas Governor Greg Abbott signed the contentious measure to criminalize unauthorized border crossings into law.
I have used a clause in the Constitution that empowers states to defend themselves.
Abbott has said the state law is needed due to President Joe Biden's failure to enforce federal laws to criminalize illegal entry or re-entry, leaving Texas to, quote, fend for itself. The state law's penalties threaten offenders with up to 20 years in prison. The Biden administration sued in January to block the measure, arguing that it violates the U.S. Constitution and federal law by interfering with the U.S. government's power to regulate immigration. And various courts have paused and unpaused its enforcement as the case has traveled through layers of the legal system. Biden's approach to the record numbers of migrants crossing the U.S.-Mexico border has drawn sharp criticism from Republicans.
And the U.S. and Japan are teaming up against countries sending nuclear weapons into orbit. And this is a message that appears to be aimed at Russia. In a resolution to the United Nations, the two countries stressed that nations should comply with the 1967 Outer Space Treaty, which bars orbiting nuclear weapons. It also calls on nations to not to develop them, but that is not prohibited in the treaty. A source says Washington believes Moscow is developing a space-based nuclear weapon. Russia, who is the part of the treaty, has previously denied developing such weapons and said that it opposes deploying nuclear weapons in space. And automakers will have more time to adjust as U.S. regulators have softened the mileage rule for electric vehicles. Previously, under the initial and tougher Energy Department proposal, mileage ratings for EVs needed to be slashed drastically by 2027. Critics charged that U.S. automakers would have faced more than $10 billion in fines for years for not meeting the fuel economy requirements. The new rule eases the mileage rating reduction and gives automakers until 2030 to reach the goal. Final revised rules are set to be released in spring. And certain fruits and vegetables you eat may contain high levels of pesticides. This is according to this year's Shopper's Guide to Pesticides in Produce. Approximately 95% of non-organic strawberries, leafy greens, grapes, peaches, and pears contained pesticides, dubbed the Dirty Dozen by the Environmental Working Group, who produced the study. Nectarines, apples, bell and hot peppers, along with cherries, berries, and green beans rounded out the list for the most contaminated samples of produce. Now, a majority of the testing was done by the United States Department of Agriculture and other government agencies. Pesticides have been linked to preterm births and with heart disease, cancer, and other disorders. But there is some good news, though. Avocados, sweet corn, pineapples, onions, and papayas lead the Clean 15 list with no detectable pesticide residues. You can also reduce pesticide levels by simply cleaning your fruits and vegetables with running water. Moving on, there's a push to shorten the standard U.S. work week from 40 to 32 hours. A bill was recently proposed in the Senate aiming to make that a reality. The UK even tested the idea and found it to be sort of successful, but some critics worry a 4-day work week could hurt businesses. Here's a look at the pros and cons.
How does a 4-day work week sound? Vermont Senator Bernie Sanders wants to make that a reality, proposing a bill that would cut the work week down to 32 hours without reduced pay.
The sad reality is Americans now work more hours than the people of any other wealthy nation.
In many European countries, employees have shorter work weeks. France has a federally mandated 35-hour work week. Denmark has a 37-hour work week. Belgium has adopted a 4-day work week. And the UK recently tested the idea. 61 companies did a trial run of the 4-day work week between June and December of 2022. The director of the 4-day week campaign talked about the results last fall.
It was overwhelmingly successful.
Nearly 90% of the businesses that participated in the pilot were still operating with the 4-day work week 1 year later. 31 of those companies have made the change permanent.
When workers have that 4-day week, 32 hours, no loss of pay, they come back into the workplace working much more effectively, efficiently, they're better rested, also more creative.
The program also found revenue remained the same during the trial, and in some cases even ticked up slightly. Critics, though, worry it could hurt employers and employees in the future.
They would ship those jobs overseas, or they would automate to replace those workers for whom they have an increased expense, or they would dramatically increase prices to make this stay afloat.
Some unions support the bill, but it's unlikely to pass in the Senate.
And a quick update on crypto. The biggest cryptocurrency recently hit an all-time high, according to an investment banking firm. That is thanks to individual investors. The head of Goldman Sachs Digital Assets believes the recent surge in cryptocurrency prices have been driven by non-professional traders. He added that institutional investors are starting to join, though. Last week, Bitcoin reached a record high of more than $73,000, and so far this year, cryptocurrency has gained 50%. Goldman Sachs and other banks have expressed interest in crypto's underlying blockchain technology, but regulators have warned that crypto is a high-risk asset. Kering's shares slumped today after the French luxury goods company warned that first quarter sales at its star label Gucci would drop by around 20% due to weakness in Asia. Here are the details.
Shares in the French luxury goods company were down over 14% in early trading and looked set for its worst day on record. It wiped out $8.6 billion from its market capitalization and dragged down the stock prices of rivals including LVMH and Hermes. The warning highlights the challenge Kering faces as it looks to reignite sales momentum at Gucci, while navigating economic headwinds in key markets, especially China. Kering forecasts second quarter group sales would drop around 10%, much worse than analyst expectations. Gucci accounts for half of group sales and 2/3 of profit. The label is undergoing a design overhaul as it tries to regain ground lost to rivals like Louis Vuitton. New creative designer Sabato De Sarno's sleek and pared-back luxury is a departure from his predecessor's flamboyant creations. But as De Sarno's designs trickle into stores, it's yet unclear whether this more modest style will resonate with Chinese consumers.
And that's all for today's NTD Business. Thank you very much for watching, and I'll see you next time.